So the IRS has this really cool document on their website about 7 suspicious signs an ERC claim could be incorrect. And I think it's a really good document because it really, the key areas the IRS is looking at when they are evaluating claims and doing their initial review of, is this a legitimate claim or not? Want to walk through this with you so you can kind of see exactly what the IRS is talking about to be aware of. We've had a lot of these conversations with our clients as well, and there's a lot of misconceptions over what does and doesn't qualify. And so I'm going to walk through this with you. I'm going to share my screen here so you can see the exact letter or document from the IRS. So first and foremost, they talk about the ERC, or sometimes called the ERTC. It's complex, right? This is a complex tax credit, and there's literally hundreds of pages of rules around the ERC, what qualifies, what doesn't. Super important that you're working with a reputable professional to help with your ERC claims, somebody who understands not just how to do calculations, but understands really all the background information as well, and understands your business really well. If you file for the ERC and you weren't asked for details, or you didn't provide details, and not just payroll records, the IRS talks about payroll records here, but really business operations records, really getting into detail about how certain mandates affected the business, how you weren't able to operate ordinary course. Now's the time to do it, because the IRS is going to be looking for this sort of substantiation when analyzing and reviewing the ERC claim. They put out a list of 7 suspicious signs an ERC claim could be incorrect. You can kind of tell by the language the IRS uses, like they're very skeptical of a lot of the ERC claims, and understandably so. I mean, there was 20,000 claims that were completely fraudulent back in December, right? They've been having a hard time going through and identifying what's legitimate, what's not. So the first thing they say is too many quarters being claimed. We see this as a common misconception as well. So the ERC works on a quarter by quarter basis, and some folks assume that, well, if they had one qualifying event, that's applicable for all periods. And unfortunately, that's not the case, right? So, and even they say here, qualifying for all quarters is uncommon. And in our experience as well, that it was rare for folks to qualify for all quarters. Typically, we often saw that, for example, the fourth quarter was almost never. The third quarter was rare. The second quarter, it was oftentimes a blended effect on it. Is, pardon me, that's all for 2021. The kind of the further away from COVID you get, the less likely that you're going to have qualifying event. So we'll talk through that a little bit more as we go through this document. But claiming too many quarters, right? If it's just claim all of them because business was tough, there might be something you should take a little closer look at. But as IRS says, carefully review your eligibility for each quarter. We certainly agree with that. Government orders that don't qualify. So government orders is a defined term in the notices, right? A governmental order has a very specific set of requirements, and as IRS says, it must be a government order, right? Not guidance or recommendation or a statement from an elected official, but a specific signed order. And generally speaking, an order is something that you are required to follow and is applicable to your business. For example, I live in California. In California, I oftentimes joke when working with clients in California that Governor Newsom did a lot of hard work for us because he put into place a lot of COVID requirements. In fact, the California Department of Public Health actually broke down COVID requirements by industry type. And these were required as a condition of being open to the public. They weren't just suggestions, but the California Department of Public Health would put together guidelines, and they would say you were required to follow these guidelines, right? So it's not just guidance, but it was a requirement. And it has to be as a result of COVID, right? They couldn't be a government order restricting your operations for something unrelated to COVID. So government orders, I think it's an area where folks sometimes get tripped up. Sometimes I heard this come up a lot. Oh, OSHA put all these rules out. OSHA oversees my business. Because OSHA put the rule out, I qualify, therefore, everybody qualifies. As IRS says, this is generally not true. Now, there are some limited situations where OSHA guidelines were required by certain industries. Again, generally not true, but this was the minority of industries. Again, it goes down to, well, were the OSHA requirements recommended or were they required? So that is the government orders, making sure that those orders are actually a qualifying government order based off what the notices state. Too many employees or the wrong calculation. There are rules around how many full-time equivalent employees you are able to have in order to claim the credit. In 2020 and 2021 have different limits. So generally speaking, 2020 was 100 full-time equivalent. A full-time equivalent is not the same thing as an employee per se, because if you work less than a certain amount of hours, then you're not going to be considered full-time, and that can vary throughout the year. So if you're close to that 110, 120 person employee count, super important that you do a full-time equivalency analysis. And it talks about in the notices exactly how you determine who is and is not a full-time full-time equivalent employee based off the hours they work, either on if you pay them bi-weekly or if you pay them on a monthly basis. There's different calculations for depending on the pay cycle that you have. That has a big impact on what ultimately is considered a qualified wages. And their qualified wages is going to determine what your ultimate tax credit is. So that's super important that you're going through and do we actually meet the thresholds there. Supply chain issue. So this is a really interesting one because supply chain is within the notices is very broad. It's FAQ number 12. And then about 2 to 3 years later into COVID, the IRS put out a long, pretty detailed legal memorandum on supply chain disruptions. And so the way to think about supply chain disruptions is the same way you think about partial suspension. I have other videos on what is a partial suspension, what's not a partial suspension. But effectively, in order to claim supply chain, you have to do a two-part analysis. One, you have to look at the supplier. What were the restrictions the supplier was operating under? Now, generally speaking, you want to have a supplier that's in the United States because the only governmental orders that are applicable for the purpose of the ERC are U.S. government orders. China does something and your Chinese suppliers get shut down. Well, that's not a qualifying government order. The supplier has to have a qualifying governmental order, partially suspends its operations, and then as a result, you couldn't get critical goods and supplies, and that partially suspends your operations. So it's kind of a 1-2 test. Supply chain, and there's a couple of critical requirements. Right? Have an invoice. Demonstrate what you couldn't get. Demonstrate how that impacted your operations. So not just how the supplier was impacted, but also how your business operations were impacted. Supply chain takes a little extra documentation as opposed to regular partial suspension. Claiming ERC for too much of a tax period. We see this a lot, particularly as government orders start to subside and start to be lifted. The wages that you're claiming the ERC on could only be for the period of time in which those orders were in place, right? So we go in and prorate those wages, ensure that if, for example, an order was lifted on, call it May 15th of 2021, whatever the day was, right? That we're only claiming wages up to May 15th. Even though the quarter's eligible, the wages paid are only applicable when that order's in effect, right? So making sure that we're not overclaiming there. Luckily, based off of how the math works and with a maximum $10,000 of qualified wages, if you have high paid employees, they earn that $10,000 relatively early on in the quarter. So it doesn't always have a huge impact, but it's important that you're able to articulate, we paid wages from April 1st to May 15th. There was $12,000 of total wages. 10,000 of those total wages were qualified wages. And of that, $7,000 of those $10,000 were eligible wages, whatever it may be. So super important there. Easy thing to overlook if you were rushing through this process. This last one, or the second last one, business didn't pay wages or didn't exist during the eligibility period. Back in December of 23, the IRS issued 20,000 letters saying, sorry, you didn't exist, or you didn't even have employees during COVID. So, I mean, that's from my perspective, I mean, that's flat out fraud. I mean, these folks were claiming something that just they weren't even entitled for. That's been a big issue, and the IRS is certainly working on sorting that out. And then if you have anybody who says like you got nothing to lose, we're talking with the government here, and we don't play fast and loose, right? Do the analysis. If the analysis supports your position, take the position. If the analysis doesn't support the position, don't take the position. It's simple as that. But some people, I think, may have got kind of caught up. Well, let's just do it. Lastly, there is a mechanism to resolve incorrect ERC claims. And I have other videos on this, but there's what's called a voluntary disclosure program, and there's also a withdrawal program. The voluntary disclosure program is for folks who it's not open right now, but basically folks who said, I fraudulently claimed this, we want to take it out. And then the withdrawal program is if you claim the ERC, but you haven't received a check yet, you haven't received the check or you haven't cashed the check, then you could withdraw. You could say, I claim the third quarter of 2021, but I realize now that I have more information, I probably shouldn't have. So you could withdraw that as long as you haven't cashed a check yet. There is a mechanism and to resolve mistakes because sometimes mistakes do happen. Hopefully this is helpful. If you have any questions, feel free to ping me. Thanks.